Hello and welcome to the latest interview from the Crypto Research Institute with me, Graham Rowan, and my partner in crime, Dee Ludlow. Dee.
Yes, good to be back. As usual, we have a great guest today. And look, we're trying to sort of really switch it up with these guests every single week. And today we have someone that's very well known in the property sector. We have Tej Singh. And before we get started, not only is Tej very well known in the Welsh auction rooms where I kind of first met him with his yellow t-shirt. He's also a 2-time author. We have the one here, for those that are on YouTube, we got the Guide to Property Investing. And unfortunately, I don't have the other one to hand, and I'm in the other one, but I don't have it to hand right now. So we got 2-time author here today as well. So Tej, it's good to have you here.
Thanks for having me. I've not done a podcast before where it has been about crypto, unless it's me rambling on about stuff you've taught me. So yeah, I'm looking forward to talking about it with the both of you.
Cool. So yeah, that's probably leads me on to my first question, really. Like, you've been heavily invested in property now for years, and I know that you teach it now as well. So what was it that really grabbed your attention with crypto initially?
I think because I invested in Bitcoin, I don't know, 10 years ago, 7 years, a long time, a time where if I put in a little bit more money, there'd be a yacht behind me. We're talking the level where it was like, people buying pizzas and shit with it. So, back then, I don't know what first got me interested in it. I think it was the technology. And I think it was the kind of money's old, money's boring. The governments don't use any form of technology. Everything is just backwards. And it seemed like, okay, this could be something a bit more forward thinking. The blockchain itself was really interesting, how that's proposed to work and how it works. At the time, obviously, it was very, very new. So it was actually primarily the technology. It wasn't, the crazy returns that we can get and have got. It was just, this is new, this is funky, chuck a couple of quid in it. What happens. That's it. There was no knowledge back then of anything really.
Okay. And in regards to the technology, with the actual, the blockchain technology behind it, how do you feel, being a property investor, how that could kind of help property be a lot more efficient? Because I see your Instagram stories, right? I know I see the rants. So yeah, how do you feel that it could make property more efficient?
I think, what, like, property's at a stage where it's kind of one step before we need blockchain, and we need it now. But what I mean is, say finance is kind of at the point where actually it kind of moves into blockchain, I think, a bit more naturally, and like tech, because it's so kind of at the edge. But property's like even pre-tech. So it's kind of like we need the tech revolution to happen and then blockchain can come in. That's kind of how it normally follows. But I hope that it's just going to skip the tech and kind of go to blockchain maybe. I think, property purchasing, like right now, you've got these old title deeds, they're written, you can barely read them, they barely make any sense. You've got to pay to access them. There's also fraud and theft that can happen with it, which happens increasingly. It's so slow. It's just very fax letter driven, old school, old boys club, kind of solicitors. And with blockchains and actually NFTs as well, your property title could be an NFT. It makes a lot of sense in some respects. And it could be like a property passport where it has all the information, your gas certs, all the crap that I send to my solicitor, to send to your solicitor, who sends to you, to send. We can just be there. And I can say, here's the wallet address, go have a look, And of course, transferring the ownership, if it's Ethereum, it's going to cost more than the freaking house to do. But, if it's something else like Solana, it will be realistic. And just generally storing transactions on a ledger like this, it just makes a lot more sense, especially on the kind of fraud and security thing. And it's quicker. Like, I just think that there's so many uses, but primarily buying and selling property, which is the biggest headache. There's so much we can do with the world of crypto.
Yeah.
So it's just interesting you come in there about the process, because to me, one of the great promises of the blockchain is that we can do away with lawyers, and it would just give me so much pleasure to see the legal profession disrupted, because I've always believed that actually when you qualify as a lawyer, you have a little operation. There's like a thing I call the urgency gland in your neck gets removed. Yes. So that you never have any sense of actually having to get the job bloody well done. Do you think that might help the process?
Yeah, I think you're 100% right there. There must be some sort of secret surgical procedure underneath Lincoln Chambers in London, because something's happening there, and it's probably that. I think it would help with the process so much. Even if we didn't have lawyers, but we had trained people who, and they'd probably be software developers, I don't know, but who were doing something, it would speed it up massively. And yeah, the disruption, we need it, because otherwise things get stagnant, things stay as they are, and there's no reason to change, because I'm still buying houses, I'm still selling them, and I still will. So yeah.
Okay.
I mean, you think it's bad in Wales where you're buying property, but I just bought one in Portugal, and the process there, I mean, they didn't actually get quill pens out, but we all had to be around a big table at the notary's office. There were 8 of us. There was like the developer, there was the notary, there was my lawyer, there was a bank, and everyone physically turns up to the signing. And we were there for 2.5 hours in a room. And I'm thinking, this is 2022, there must be a better way than this. And surely blockchain is the answer.
I hope so.
It definitely will help tie it all together. One other thing you mentioned there was NFTs. Now, I know that you have been flipping some NFTs over the past couple of months. So could you give us a little bit of your experience since you've been investing in NFTs, and what you would say to somebody else that maybe hasn't invested in NFTs at the moment?
Yeah. So, when people invest in crypto, they kind of say, look, put money in that you're okay to lose. And you kind of believe it, but you're also like, okay, no, I don't want to lose it. We're all like that, right? With NFTs, no, you're gonna effing lose it. Like that's it. Like you cannot put anything in there. Like I know we all say it, but like it's even more so there, because with cryptos, they sort of have, I suppose, like cryptocurrencies have more of an understandable use, or they have some benefit or function, or, all the things we talk about. They've got something speeding up, completions of transactions, whatever. NFTs claim to have use, and, they do sometimes. There's some which give you access into like special clubs. Lamborghini have an NFT now, which is sick. And that's just going to be crazy expensive. But some of them, like the apes, the Bored Ape Yacht Club, whatever, they sell for millions. The CryptoPunks sell for millions of pounds. People listening to this, and it's a pixelated image. Now, I like art. I think that's shit art. It's just literally pixels. Things like that, they don't have. This is a discussion I'm sure we'll get to about value. They don't actually have I don't think, an inherent functional value. They have a value in the sense that, oh, Picasso, I'm going to pay $1 million for that. But if D scribbles, I'm going to pay him a tenner. It's like that kind of subjective value. I think that's why you have to really put in money you can lose, because if things change and no one likes apes anymore and they want, chipmunks, oh, well, bloody hell, the floor drops, and I know crypto is volatile, but NFT floor prices in terms of the minimum you can, or you would sell them for or buy them for, is really volatile. So I think their lack of function for people who are new is like, you can make so much money from them. Like I've seen it. Like I've literally seen people in the group that I'm in do it. But you have to be very careful. My experience is I've made a decent profit on one very quickly. The second one made 50 quid. So I just scraped out of it. The third one is currently in profit. I'm holding it for the long term. But, I'm not as active as maybe I was a few months ago, because I'm busy with some M&A stuff that we're doing, and property again slightly. So just look, it is very risky. You need to do your research, because literally all 3 of us right now can go launch our own NFT projects individually. And if we build enough hype, which, we probably could, we do what's called a rug pull. Everyone buys an NFT. Yeah, enjoy your shitty JPEG. We're on the beach, because, well, there's no, who's going to stop you? Like there's, what I mean? It's so unregulated in that sense. So, and it happens. I've seen it. So yeah, risk is my biggest thing around NFTs for people listening.
Yeah, so go on, Graham.
I was just going to say, you're almost at opposite ends of the risk spectrum here, aren't you? You've got good old bricks and mortar at one end, which everyone's certainly every Brit's favorite investment has been for 30 or 40 years. Yep. And then you've got NFTs, which are even kind of out there on the risk curve in the crypto world. So do you have something in between in terms of your kind of asset allocation in cryptos? Where would you say, if NFTs are at the sort of red flashing warning light stage, what else have you got in the crypto world that's helps you sleep at night a bit more?
Yeah, so I think in the middle is probably things like Bitcoin and Ethereum. Again, obviously just crazy volatile. We've seen what's happened, although it's picking up back now at the time of recording this. Although when someone listening to this, who knows where it could be. Like, I think it's kind of having the blue chip kind of cryptocurrencies is what helps me sleep, although they I think really there is no crypto answer to that question. For me, the answer is like stocks and shares, various funds, a bit of gold, a bit of silver, kind of mixed investments out of crypto. Because I mean, I don't care where the price goes. It's all money that I can lose. It's fine. But with crypto, yeah, I think all of them really are too volatile, especially in a percentage term, that I could name one that would sit in the middle. But the middle is something else, which is investments and other stuff.
Yeah. I think as well, looking at crypto and where the value derives from, I think if we look at across the board with assets, everything is kind of, well, crypto is sort of more in line with the network effect around crypto. So, the more people that get involved, the more other users get rewarded, within regards to price action or staking rewards or whatever it is. Whereas with property, people sort of use it mainly for wealth preservation, where their pension, or some people want it for cash flow and try and scale very quickly, but a lot of people are there to try and mitigate some risk, take some sort of risk off the table, and also have that pension there as well. But then also, if we look at what moves both markets, then people look at the sort of supply and demand. I'm not going to go too macro here today, I'm like Tej, but I know people generally that talk about supply and demand, and but obviously with property we kind of know is sort of the availability of credit. And the question I'm going to get to is, the mortgage, as we know, didn't really, like, the mortgage has been around since the 1800s, but the mortgage as we know, since around the 70s, if you look at the prices of property since like 1970 to where we are today, we've had this very, very flat for house prices from the early 1900s to 1970. The mortgage gets brought in, it goes boom, right? Because the availability of credit is now more available. They sort of promoted home ownership a lot more, and then people sort of jumped into it, and you didn't need to have all this money to get involved. So in regards to long term and where we're at today and sort of the uncertainty in the economy or whatever, do you feel it's important to diversify into something which is more focused on the future rather than where we're at now, if you was from an investor's sort of head? Or do you feel it's still good to sort of tick away doing what you're doing, and hopefully down the line everything keeps going the way it is?
Yeah, it's a good question. I think the question and the answer is quite nuanced, because it's a bit of both. Like if I was on Dragon's Den, someone bought something to me and it was very current, I'd be thinking, okay, well, I'm going to get a return soon, but I can't really see necessarily the big, like a clear end picture. But I can see the current. That's great. Turnover profit, great, whatever. Or with a stock, the dividend, the PE ratio, whatever. With like a future thing, it's kind of the opposite. I'm like, okay, I can see it kind of now, but all the income, all the return on this is sort of there where I think it will go. So there's a lot of uncertainty in both. That I think it's definitely safer to stick to what's working now because it's working now, and if it changes, you can kind of adapt with it. Whereas having a future focus or future vision, like, more means that there's more uncertainty in your return on your investment. But I think that's maybe the nuanced answer. But the kind of the blunt answer is, I think you want to be investing in things that are futuristic or aiming for the future. Like, obviously, you've got an aging population, so you want to invest in things that are going to match that. We've got increase of AI, VR, all sorts of technological things, biotech, growing limbs, growing meat. Why aren't we, those are things we should be looking at, because logically that's where we need to go. Like certain things are not sustainable anymore, and they won't be. So yeah, it's a tough question. It's a tough answer. I think you have to have a balance, and the balance has to suit your risk appetite. At the same time, you take less risk, you probably make less money. Take more risk, you probably make more, but then you're risking more either end. So yeah, I think the neutral advice is to be in the middle and have a balanced, diversified portfolio, D.
Okay. I think I can say, categorically here that I'm at a different stage of life from you guys, and one of the things you've got in your favor,
much younger, obviously,
yeah. Is time, and you in a sense you can afford to take a bigger risk on that future stuff you're talking about, because you can take a 40-year time horizon.
Yeah.
And you know, things, if you go back 40 years to you know, what, the 1980s, and think of all the things that have come on since then, you know, I think I was carrying around a shoebox sized mobile phone in the 1980s, you know, and the internet was all in the future. So I think, yeah, I agree, a balanced portfolio makes sense, but I think people in your age group can afford to take a bigger element of risk because you've got a longer time horizon, and therefore, and also you're closer to some of these technologies, so you understand them perhaps more naturally and more easily, and can perhaps discern between the technologies that are going to make the biggest difference and give the biggest return. So I'd be fascinated to know, Tej, at the moment across your whole portfolio, what's your kind of asset allocation between the safety of bricks and mortar and the excitement of the new future crypto stuff?
Yeah, good question. I did a kind of a spreadsheet the other day to look at all this because I didn't really know where it was. It was just kind of like, yeah, there's some there, there's some there. I would say of liquid cash, there's probably about 25% in, it's 25 to 30% in crypto, I think. A couple of percent on top of that is sitting in wallets for NFTs as and when needed. I would say probably 15% of it is in a car, which is actually an investment as well. Or I tell myself it is. And then the rest is mixed between, not property, actually, let's count that out. The rest is mixed between like a not a lifetime ISA, what's it called? Like a GIA, so a general investment account, and a stocks and shares ISA, which I kind of use Nutmeg and Moneybox and Money Farm to kind of manage it. I pick certain things within it, but yeah, the returns have been pretty epic from them. And the rest, I'd say a little bit of cash for living. Yeah, I think that's the general gist of it. I've got some in a lifetime ISA, which no one talks about, but 25% year on year to buy a house, like guaranteed. That's pretty epic. So I've definitely made some nice money there because I'm buying a house soon. So yeah, that's the kind of split, I think.
And what's an investment car? I've got to hear about what this one is. I've only ever spent money on cars. I've never made money.
So it's not a classic Ferrari or Lamborghini yet, but it is a CLK 63 Mercedes, an AMG, and it's one of the last of the M156 engines, which is naturally aspirated, 6.2 liter, obviously ridiculous engine size, and it's a very rare car, full stop, and the interior combination is also very rare. So because of all the electrification and all this Teslas and all this stuff, there's sort of, you know, these cars are kind of maintaining, if not going up in value. And yeah, I bought it because I actually love it and it's exactly what I wanted. But I also know, like, strategically, that I'm really not going to lose much on this, if anything.
I suppose in this market as well, you can buy pretty much anything and it'll be worth more in 6 months' time.
I mean, my other car, I bought it for like 800 quid like 2 years ago, and I sold it for 1,300 with issues. Like I said to the guy, it's got all these errors. He goes, yeah, whatever. What is happening? It's crazy.
Exactly. Now, it sort of brings me on to the property/crypto next question would be, so I got an article here on Cointelegraph. It says a quarter of people will spend time in the metaverse by 2026, right? And the reason why I want to move on to the metaverse is because with the different trends and what's happening now and the technology that is sort of, it's not coming out of nowhere, but is really developing very fast now, like 3D print construction. We've seen modular builds have been around for a very long time already, a good few years, and they're becoming more and more now with house builders. I think every roof on a Taylor Wimpey house is modular now, I'm pretty sure, but these are going up everywhere. Now with 3D print construction, we take away a lot of the hassle in the delivery of materials, supply chain issues, staff, people actually working, and all the different types of people you need to arrange to get in there. Now, the question I have is, if 3D print now makes building houses more efficient and a lot more quicker, you can build a house in like 2 weeks, right, and print the house, then what does that initially do for house prices? Now, I understand generations, some older people will want to have your traditional house being built the way it always has been, but the younger generation probably are not really going to care if that's all they know. So if 3D print potentially affects house prices, are you then going to be looking for your ROI as a property investor inside on virtual land, inside the metaverse, or a metaverse, or one of, to get that ROI, because you not only can you use that piece of land or property inside the metaverse for advertisement. Like, let's be honest, some of the houses we have in Wales, you're not really going to advertise anything on the front of them. So, but you can now turn your house into like multi-use with advertisement and other things as well. Do you think property investors, as we know today, are going to be more invested inside the metaverse on virtual land because they will get a better ROI and a more passive income if 3D print and modular affects house prices? That's the probably shortest way of me putting that.
Good question. The short answer is no. The explanation is, so firstly, yeah, 3D printing literally everything should be done this way, right? We know that. It's going to take 10 years to get there because the world's so slow, especially the UK and other countries. Mortgage lenders need to lend on it, which is the biggest thing. So the availability to credit for even non-standard construction, which is still safe, it's still structurally sound. Oh, they run a mile from it. The stuff you're talking about, they're going to take so long. They only recently have said Japanese knotweed's okay. It's like, we knew this, we all knew this, but you lot took 10 years to do it. So for me, the prices aren't going to change until mortgage lenders say, cool, Barclays, HSBC, everyone is saying, yeah, we'll lend on it, same LTV, same rates, go to town. Until that point, it's not going to change, because right now, a lot of developers are literally begging to build this way, but they can't because no one can buy them at the end of it, cash buyers, and that it just doesn't work as effectively. Your market's too closed, etc., etc. First-time buyers are not cash buyers usually. So until that point, it's not going to change the prices. If they do start lending on them, I don't know, because developers are still going to want their margins. And if they've doubled because making it is cheaper, and that's the general house prices, I don't know how it would work with all these new builds that are somehow way cheaper to build versus the older houses, which still carry the value because everyone here's got a mortgage. And if that price drops to the new build price, everyone's in negative equity, bailouts, blah, 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 mortgage prisoners. I just think there's a lot of bureaucracy that will come with house prices dropping dramatically. Will it happen and taper down over time? Maybe, but then there's an argument, as we deplete our natural resources, yeah, 3D printing is great, but the stuff they need for that and modular construction is still from Mother Nature, and we're just killing her every day. So there's so many avenues here. It's complex, but it's not going to happen anytime soon because mortgage lenders are, what they're like. They're just ridiculous. Are they going to go into the metaverse? I said no at the start because property investors, by their nature or their learned nature, is that they are safe. They like bricks and mortar, like Graham was saying earlier. They like, it's physical, it's property, it always goes up in price, it's safe. Oh, we've done it for generations. Oh, I have to, but what? Spend 30 grand on a video game house. What's that about? I think there's a disconnect between the majority of property investors who are maybe a different generation, even ones who are coming through. And you and me talk about this a lot. I send you random voice notes on this. It's like, where is the value? I get that, why is this got value just because it's physical? But I think proving to property investors who love property because it's property and because it's real, that you should buy it in a video game, essentially, that their kid plays on Call of Duty, and it's worth something, and you can, even though it's a bigger ROI, it's like a lot of property investors we know hate crypto, won't touch it, but it's a bigger ROI. I think it's going to be the same thing, where they're going to just say, it's a made-up house, it's basically crypto, I'm not interested. I think, at least in the next, I don't know, in the short term at least, I think that's going to happen.
I think it's interesting because there's so many things been going on in the property investing world in the last sort of decade or so. We've had what you could almost call a vendetta against landlords by successive governments with new tax changes and all the rest of it. I'm certainly seeing a lot of people in my generation now tending to divest property investments and get into other areas. But I think you seem to appeal to perhaps a new generation of property investors. And one of the things that always worries me, I speak twice a year at the Property Investor Show in London, and I see these gurus with their stands there, and they're peddling the same old stuff that may have worked 20 years ago but doesn't work today. So what do you see that is working for property investors today that still makes it worthwhile despite all of these new restrictions and developments we've seen in recent years?
Yeah, good question. I think it's, at least in the last 18 months, pretty much since sort of lockdown started and COVID started, especially a few months after that when everything kind of got a bit okay, the market has been absolutely crazy. Everything is overpriced. Like we were saying about cars, it's the same for houses. The stock just shot down because of repossessions, probate courts were closed. So much stuff happened. Lenders were obviously like, whoa, we're not touching anything. And prices still, to this day are just ridiculous. So I think it works, and it's worked for me for flip. So buying to sell for anyone who's new to property. If you can get in at the right price, and the right price now potentially is 20 grand higher than it was 2 years ago, you will sell for 20 or 30 grand more. Now, that I think can be quite off-putting to investors because they're like, well, what if it's a bubble? What if by the time I finish the refurb, it's not there? But for 2 years, it's been a very big bubble that's been blown because things are still high. So for me, I've switched to primarily focus on flipping properties because even if it doesn't go as well, you've kind of got more fat in the deal. Whereas when I do like a buy, refurbish, refinance, it kind of caps at 75% on the remortgage. So I kind of have to be way tighter on figures. With a flip, I get all of the sale proceeds. I can kind of be okay with it. And looking at the number of viewings that I've had and the interests I've had on my flips and what I'm seeing in the market and around me at these viewings, if you're selling right now, incredible time to sell, very difficult to acquire. So I would focus on that. I'd look at legal issues. I'd look at, funky stuff that people run away from, big cracks, subsidence, all that kind of stuff. It is very hard though, especially for portfolios in your personal name. The government hate us, tenants are incredible. Oh, don't pay your rent. That's okay. Just live off the state forever, you lazy fucks. It's just, I don't know. The government encourages a lot of, I don't know what the word is, just being, I don't know why they don't like us. We pay so much in taxes, already. I've got a vendetta back at them. So there we go.
Fantastic.
Okay. So do you feel though that like one of the things I feel would be an issue for new investors to even look at crypto is how user-friendly a lot of the platforms are. Now, do you believe if that sort of bridge to get involved was a little bit easier, more would entertain it?
Yes, because Netflix, Spotify, all the apps and stuff with lovely interfaces and easy to use have the most, viewers and followers. No crap app or crap website has the best business as a fact. It just doesn't. There's nothing crap that is at the level that they are at and, other companies. However, I mean, maybe because I'm into tech or whatever, but I find some of the platforms really easy to use. Can I name the platforms that I like and don't like?
Yeah.
Okay. I don't want you guys to get sued because the liability is not on me. If any platforms are listening, it's on these two. So Binance, the biggest, most, even some of the grammar. I know it's not an English company, but I'm just like some of the real basic user interfaces on Binance. I just think, what the hell is this? And the app, I'm like, are you serious? Like, you guys are one of the biggest. You got your own coin. It's 2022, and you're moving like Windows 98 on certain elements. I'm just like, even I go on, and I'm like, how much money do I have in? Like, what did I put in? What is it now? I'm like, what? For me, and we were talking about this. None of these things kind of show you, here's how much you put in. You say you put in 500 quid 10 months ago. Now it's worth this. Every time I have to work it out. And I'm like, what? This is a basic algorithm. Like if I can do it in my head, a computer can do it quicker. Nexo, I love Nexo. I think their social media, their branding, everything is like on point. Their security they claim to have, which I don't know if you can verify it, etc., is great. Their platform, I think it's super easy to use. The staking rewards are great. Now they've got a leverage thing, so they're just adding lots of stuff. Kraken, really nice interface, but I think it's still a bit tricky to use. I mean, MetaMask. Listen, if you are any part of MetaMask, you need to just chop your hands off and never touch code ever again, because what the hell have you created? And why have I got 18 million ETH in my wallet? It's not even mine. MetaMask is trash. Like, honestly, I can't, I don't know how, like, it stops me doing stuff. Like, I can't do, like, I'm just like, okay, well, I'll go to Phantom, which is a great wallet for Solana. I'm not sponsored by them, but if any wallets want to sponsor me, you can reach out to me. But like, yeah, so I think if it was easier and if it was accessible and if banks let you transfer to them, because I've heard like most banks sort of are not letting you and not letting you take it out. I know Monzo lets you, so big up Monzo, but yeah, like I've heard people have gone through like all of their accounts. So accessibility is a big thing. And as it's tech and it's 2022 and it's future, these guys are at the edge of it, bleeding edge, as their websites will say. Like, why don't you make nice interfaces, people, and make it easier to use?
Yeah, I do feel that that's a bit of an issue when you do, like Binance, for instance, one of the most well-known. And if you go on there, I've had people ask me, like, how do I do this and this on there? Because they get it is a little bit too, I think there's so much stuff going on there, rather than be like, this section's for this section's for this. That would make it a lot easier, because, you know, you can look at so many different things on Binance. But yeah, I think, yeah, Kraken's quite user-friendly, but again, terminology, people that's never been on there before may struggle. I think Nexo, yeah, I think they've got it dialed in regards to how user-friendly it is, how it looks. Everything sort of is in sync with Nexo, which is good. But yeah, I feel that is a bit of an issue with investors, because some people, you know, even like my mum, for instance, before I sort of told her to look at Bitcoin and ETH, I think it was like Jan 2020 or something. She was like, but how do I buy it? And then even though she bought some then, when I was away last year in the summer, she was like, I'm gonna buy some more. It took me about an hour on the phone to explain to her how to do it on Binance, because it was just an absolute nightmare. So yeah, I think that does stop people, just like you mentioned on MetaMask. Some of the things that I've wanted to get involved in, MetaMask is so all over the place. It's such a headache. I just go, whatever. I'll just wait for the next one. And it just because purely based on the way the wallet works. So yeah, I think that could be an issue. What have you found, Graham? And what have you found for people around you?
Well, I think it's so funny listening to you guys moaning about these interfaces. What do you think it's like for my generation? I mean, you know, come on. I mean, I got this thing. I've got something on Crypto.com on my phone, right? And I hate using my phone for what I call real applications, you know? And so I get this thing. So we, Crypto.com, have decided you must have two-factor authentication on your account. So here's how to do it, right? Now, it involved taking my phone and scanning something on their app with my scanner, which is a different app on the phone. So unless I could somehow clone my phone to scan the scanner that they, you know, and I said to their support people, how the hell do I do this on a single handset? And they said, write the code down manually. And it's like a 47 character code. So I write 47 characters manually. I then key in 47 characters and it rejects it. And I get an error message. So, you know, 3 weeks later, I can still not access my Crypto.com account because they decided on. So yeah, I know all about these kind of issues, and it stopped me. I bought nothing on Crypto.com since they tried to do this, and everything's frozen there. So, and they talk about the banks. Every time I make a transfer from Barclays to Coinbase, which is a big public company, I get a call from their fraud team. Do you know how risky this is? I said, yes, I'm an experienced investor. I've made this many times. Every single time. I said, can you set some flag on my account so I won't get a call from you no. You know, so they're treating me like an infant, you know, even though it's a main public company, the biggest exchange in the world. So yeah, I totally buy this. They are but I suppose the one good thing about this is it means that you've got to be serious. You've got to invest in your education to do this stuff, and it keeps the riffraff out. But my God, it's not exactly frictionless.
No,
sorry about the rant.
That is actually quite funny. Just before I've got another question for you, Tej. But back in the summer, I needed to access my ledger, and I was away, and I didn't have the seed with me. And for some reason, I couldn't log in. My password didn't work. I hadn't used it for a long time, so I was like, maybe I got it wrong. So I called home and was like, you know, go and get my seed and my password. I just could not get into my ledger. So as you can imagine, I had a serious amount of panic attacks that day, and I was so stressed. It was unreal. So stressed. And then I plugged my ledger in and just opened up the application without me logging in. So I was like, yeah, while I'm in, I'm just going to transfer everything out. And because the confirmation times for like Bitcoin's like 40 minutes, Ether's only a couple of minutes, it literally took me hours and hours. So I was so scared. And yeah, so that's the one thing I feel people within crypto gets a little bit anxious, because if you want to store safely, just the whole moving stuff to cold storage, people not understanding it. But like Graham said, it's definitely the sort of educational side that needs to come into it to help. Same as in property and everything else, right? Unless you really know what you're doing, you shouldn't be diving in head first. Anyway, so Tej, I'm not sure if Graham has any more questions, but I do have one. Now, if it was purely based on ROI and you had £100,000 and you could either buy one house or put the entire £100,000 in one cryptocurrency, and you had to leave it in there for 20 years, which one would you pick?
Ooh, this is literally the answer to your present or future investment profile. This is the answer, because I'm thinking, well, if I put it in crypto, who knows where it's going to be? Could be zero. Put it in property, it's not going to be zero. I think, you know what, because you said 20 years, it's too long a time frame right now for me to think of any particular cryptocurrency coin, even Bitcoin, that I necessarily have faith in is going to 100% be higher than it is or equal to it is today. Whereas with property, I know it's going to be higher. The worst case, it'll be the same, but 20 years, it will be higher. And I can also leverage against the property by putting a charge on it and bringing money out, sweating it. So for me, even though I don't really want it to be in property, the answer is property, because it's easier to access. I can see the worth of it easier. And yeah, maybe I just don't have the faith in 20-year time frame for one crypto yet.
I think I fully understand that answer. I think it really plays more into the fact that you do need to have this sort of balanced portfolio. But I think the challenge is that there will be things that are going to go absolutely skyrocketing in the crypto world, and you've got to have some exposure to it. My worry is the opposite, particularly for my generation, where the ownership is so low that they're missing out on this stuff. So I think rather than saying, asking you to make that binary choice, you've obviously already got this balanced portfolio which works for you. But I think there's so much ignorance out there. There's so much misinformation. One of the reasons that Dee and I set up the Crypto Research Institute was to try and help people to learn more about this and make a more informed decision about whether they want to be involved. Because 96% of my generation own zero crypto, and that cannot be right.
Also, do you feel like we're going through a bit of a paradigm shift now, whether people like to believe it or not? Like what's happened over the past sort of 24 months definitely is not normal, right? we've never experienced this before. So a lot of things that you could have looked at and thought, I kind of see that's probably going to go this way or this way. The total opposite has happened. Like you mentioned PE ratios and value in stocks earlier. You in this market, you can't even do that anymore. You can't value a stock the same way you normally would. You can't value a house the same way you normally would. And you could argue you can't value cryptocurrency the way you normally would, however people would look at it, if you wanted to make the argument. So do you feel, when we're looking at the future and where things potentially could go, do you feel that we have to take a bit of a different look at it and step back a bit and be like, well, this is what generally happens, but over the past 24 months, that hasn't happened. And what should have happened hasn't. Do you feel we need to take a different look? Because where we are today, this is going to end one way or another, whether we look at some sort of entire crazy world recession, which everything goes wild, which when this first started happening, we had a conversation on your podcast, and it was kind of more my thoughts was going to have a real bad ending to this. And then as it's gone along more and more, and I've started to see how central bank digital currencies are now going to come into play, I'm sort of more inclined to think we're going to have some sort of debt restructure instead. It's going to be devastating I can't imagine them sacrificing the global economy at this stage, but whether they can help that or not. So do you feel, based on where we're at, and it's very uncertain and nobody really knows which way this is going to go, Do you feel we need to take a different outlook rather than just keep doing what we've always done?
Yes, in every shape and form, and irrespective of any paradigm shift, I think we always have to be doing that, whether it's in our mindset, whether it's in how we look at investments, how we structure our purchases. I think anything and everything should always be kind of looked at somewhat differently. Like, look, past results, people say, oh, they're not an indication of future results, whatever, but the past does tell you things about the future. How I reacted to something yesterday teaches me today how to react to it. And it's just a human process of learning. But yeah, I think we do have to take that step back, but it's unknown. It's very difficult because if we look at the past, there's kind of safety and security. We say, well, okay, crypto did this, here's the chart, easiest thing, look at the chart. Okay, did it every year. So, well, this year it'll do the same thing. There's security in that. There's not security in saying, okay, hold on, let me take a step back. Because you're kind of going from like shallow blue waters where you're like, oh, I can see everything, to the deep blue ocean where you're like, so what am I basing this off? What, where am I getting this from? And like Graham said about misinformation, it's so easy to misinform. All I need is a nice watch, a Lamborghini. I can get those with a couple of phone calls, take some pictures in front of it. I'm a crypto expert, right? And I'll be believed. You lot know that I will sell courses from a couple of, like, it's how dumb society is as well, and shallow society is.
Yeah.
But because of that, when you're in that deep blue sea of the future and looking at it differently, where do you take advice from? So yes, I agree, we should, but it's so much harder to do it, like properly do it, than it is to sort of do what we know.
And the reason why I asked is because we're in a situation now where we've got some serious issues with supply chains. At the same time, demand for all asset prices has gone absolutely wild. I think I seen yesterday that America actually they're currently building more homes than they were in the peak of the housing bubble in like 2005, 2006 at the moment, right? They've topped it. So we're in a situation there where, do you think, okay, well, is that normal? The last time this happened, if we looked at historical data, you want to run for the hills. If we looked at historical data, and then in December, when everyone thought Bitcoin was going to run up to six figures because of historical data, a load of people piled in because they thought this is where it's going to go, and we're going to have this big euphoric phase. Well, I think what we notice in markets is, one, markets already price in what's going to happen before it happens, and two, they've been kind of doing the complete opposite of what everybody thinks. So I believe, if you was to say value a company, you do need to look at, historical data to try and, look at and forecast what it's going to do in the future. But in the market we're in now and sort of adapting to the market, things aren't doing what they did historically. So that was kind of my question, whereas if that is the case, because I've seen you shift your sort of strategy in property. You was very heavily in buying buy-to-lets and building that portfolio, and then in the market that we're in now is quite uncertain for you, so you was kind of like, I know I can benefit from this short term regardless of what happens, so you move to flips. And so you do have to adapt to what's going on. But that was kind of what my thought process was behind the question.
Yeah, it makes sense. No, it's definitely something we all need to think about in some shape or form.
Yeah.
Yeah, and I think assets are not doing what we expect. Partly look at gold. We're in a period of high inflation. You'd expect gold to be shooting for the stars, and yet it's not. And if you're an American, the chances are now your mortgage is owned by the Federal Reserve because they've been buying all these mortgage-backed securities, So it's kind of very strange, manipulated markets. This is not free market capitalism. And I think this is behind Dee's question. At the macro level, we're, the Japanese Bank of Japan owns 40% of the Japanese stock market. That is ludicrous. That's bonkers. How can I know the price of Toyota if the bank's buying it at any price with funny money created at the click of a mouse? This isn't capitalism. It's actually closer to authoritarian communism. So I think I'm in my seventh decade. There's never been a harder time to be an investor. And so I think back to what you were saying earlier, Tej, the only answer is that you kind of own everything and hope that some of it's going to do well in the future, because we just don't know.
Yeah, well, yeah. And I think off the back of what you mentioned with the Federal Reserve there, I actually seen again that Wall Street now owns 1 in 7 homes in America. That's
wow.
yes. So when you start talking about rug pulls, you know,
Just the whole government, the whole world.
Yeah. But yeah, well, look, I think we've come to a close there. So like, really appreciate you coming on, Tej, and giving your insights on this. It was good to hear from somebody that's still very active investing in property, and to get your outlook, especially somebody that's very open-minded. You know, what I do like about you is you challenge your opinion regardless, and I think it is important to challenge your opinion in the world that we live in today.
Cool. Thanks for having me. It's been good fun.
Awesome.
Thanks a lot, Tej. Thanks, Dee.
Thank you. Speak soon, guys.
Cheers.
Bye.